Welcome back to Primary Source China Investment. This week we're on show J6. And before we get into it, we wanted to comment a little bit about coverage of China because there's a tendency to only cover that which confirms your bias. And worse is when your paycheck is depending on what you cover. So we're talking to and specifically at those global consultants, experts, regional portfolio managers, even those foreigners on this platform that keep telling you China is the workers' paradise. Thankfully, Peng Guo and I don't have any such compromised position. So what we try and do is look at the totality of information, look at the data, put that through an investment spectrum, and give you our opinion. So it has nothing to do with China good, China bad, Europe good, Europe bad. I want to bring up a specific point in the past. You remember that cringe-worthy photo of Mark Zuckerberg jogging in Tiananmen Square and then doing an interview in Mandarin? How did that work out? The reason we bring that up is just because you have a behavior doesn't necessarily mean you're going to get what you want from Beijing. So if you look at Facebook and Instagram, they were blocked then in China and they are still blocked now. And I'm not trying to establish an equivalence here with TikTok. I don't think TikTok should be banned in the United States at all. I think Washington should be pushing towards a level playing field for companies doing business in China and Chinese companies doing business in the US. If we cannot establish a level playing field, then you're always going to have this differentiation between companies doing businesses globally versus locally. Okay, I'm going to get off my soapbox. Peng Guo, if you have anything to add to that, please.
Sure. Yeah, I think right now is especially in the past couple of the program we're really talking about political is really contribute positively to the global economy. Right now, that's so many man-made conflicts and even the wars. So that's I think the whole world really get enough for that. And also, in my opinion, there are much more common interest than the conflicts. So right now, people really try to take the position, and because they are short of the ability to manage the economy, or is that can work together. So that is so annoying to cause so many troubles for the global economy. But overall, I think whatever society and the economy, they have no tradition, they have their own culture, they just keep going along their way. I think it's very hard to change it, and people really can assume they can easily to change something and like overnight, and that's absolutely no way. Even like your children, if you really want to change them, whatever you go, that would be so difficult to do it. And not mention the other big countries.
Yeah, I totally agree with that. And I think what you mentioned in terms of this notion of change, you cannot necessarily change individually, but what we're seeing is a long-term transition where the biggest economies trade with each other at a decreasing growth rate. The US also is or will be or going to be implementing more protectionist practices. China will continue to claim to open up and never actually do that and hope the global South, whatever that is going to pick up the trade slack that comes from the US and Europe. And if that fails, they're going to simply continue to build out their manufacturing base in Mexico and Southeast Asia as final assembly. So these things are happening. This is not good. It's not bad. It just is. So plan accordingly. And with respect to that, this week, there was a ton of great data, which you could use to either confirm your bull case or bear case. The first 2 points is the industrial production and fixed asset investment. Both showed a nice uptick. Conversely, the consumer remains tepid. And remember, we keep saying China is a consumer-led market. So if the consumer is not feeling confident, then recovery is going to take a bit more time. So perhaps the best takeaway from these 4 charts is that there's some pain ahead, but maybe the worst is in the rearview mirror. Peng Guo, you've been talking about this for a couple of weeks now.
Yeah, because we're really in the investment world. So in the investment world, we're really basically we build the measurement or performance. That is obviously people can adjust the criteria how to measure the performance. But from the whole world, is really no such criteria, people really just do whatever they want. So that caused a lot of damage for the global economy. So I hopefully they really can show some wisdom to find out ways to work together rather driving by the emotion like the kindergarten kids.
Yeah, sometimes it's hard to differentiate the independent variable and the dependent variable. Like right now,
That's
it does look like there's, ramping up another trade war, right? Beijing's export strategy is basically turn it up to 11 and rip off the knob. And what's that going to mean for Europe? There's already a lot of pushback because, European countries are saying, oh, Chinese steel is flooding and, Chinese EVs are coming. I mean, we've been through this on and on and on. And as all this
yeah.
is happening, Tim Cook is leisurely strolling Whitehand and opening up the newest Apple store. And the China huggers are going to say, well, look, everything's great. Apple's reinvesting in China. And on the other side, the China sluggers are going to say that, look, this is the same thing that Mark Zuckerberg tried to do, and it's going to smack him in the face. The truth is probably in between. So that's how we see it.
So
And
they try to play some small tricks and try to seems like get some advantage in their side or cover the ass for their other problem. But in reality, is most people understand that and know that how that play the tricks. The key things I think we still need to improve the system, try to screen the right and capable people to manage the right position. Otherwise, you cannot just put inexperienced or no background guys just to make the big decisions. It seems like no experience. The money manager manage like the trillions dollars or even billions dollars. Those guys maybe just manage $100,000 before. So
yeah.
that's what cost seriously. That's a lot of guys make a decision really impact the trillion of dollars.
Yeah.
So
And on the investment side, if you're based in China, you better like Huawei phones. And if you're an Apple investor, well, you've seen what happened when Apple misses. Last quarter, based on just China's gap in sales, they missed sales of $3 billion in one quarter. Expect more exogenous events. Foreign firms on the ground are going to run afoul of new and shifting regulations. Similarly, prepare for more protectionist bill from the Ways and Means Committee explicitly against China-based companies. More accusations and convictions of spying, less engagement overall. We're not here to say this is good or bad. It just is. Plan accordingly.
yeah, and the most important and do things good and do things right and improve it yourself rather than spend a resource to stop other people get slower. So that is cause the totally different strategy and will shift all the internal resource and all the to the wrong direction. That's my opinion.
That's great. And with that, we're going to leave it with show J6. Thanks for tuning in. We're going to be off next week, and we'll see you in 2 weeks.
Thank you.